good morning to you guys. Hope you're doing well. We had very much a roller coaster day yesterday. You would have seen on risk. Things really pumped. And if you were watching the bubbles, we saw a big move on the euro. Very crazy. It was that the euro was over here. Don't forget this is the euro basket. So it examines how the euro is positioned sentimentally against its peers. So euro was over here, travelled all the way over here. And now where we come all the way back. All right, so that tells me to be careful around the euro, and we also need to be careful around the USD. The reason for it is down to the yields, and there's a little bit of a warning sign just here, which I'll explain to you in a bit. So we've got to be careful with the USD. So our trade of the day isn't going to be touching the USD because I'm quite wary around it, and technically we're still pretty mega strong on the Dixie, you know. So the risk calculation is that we are risk off at the big picture, so they're net long quite a lot. They're still quite bullish. However, over time they're less bullish, and that's risk on. So if we have a few more days at this momentum, we'll be risk on by Friday, and that's going to tie into NFP. And then it's a bit of a roller coaster, a bit of a casino. And as you know, I don't trade Fridays, and especially try and avoid NFP if possible. But it looks like we might. If we have this momentum behind us, we'll be risk on Friday. Okay, so that's important to note. And then the dollar will dump as a result because we'll be risk on. All right. VIX is below 30, so that's important to note. And the reason why we've got to be careful around the USD is that these rose. And now if these rise, they support a firmer USD, typically speaking. It's not like 100% guaranteed, but it tends to offer support for the USD. And that's like, oh, that's a surprise. When I saw that, I was like, oh, the USD was falling yesterday. But of course, this is just, it's suggesting that we're going to have some strength in the USD because of that. And also we've got a bit of uncertainty. We've got the US PMI today. We've got NFP on Friday, and then we've got the CPI next week. So these are probably going to spike, and they're probably going to support USD. So that's a bit of a warning sign. Now, the thing with the yield curve is that we've got an inversion on the 12-month and 2-year. Then the next thing, it will be the 6-month will be greater than the 12-month. The 3-month would be greater than the 6-month. And then we're going to have a complete inversion on the yield curve, where we should be going there diagonally up, will be going diagonally down, and that's going to be risk off. Okay, so yesterday, how legit that pump was, it looked like a mad scramble, like a desperate panic. Admittedly, the sentiment, you know, the retail guys had shorted it, so the price went up to punish those guys, but fundamentally we are pretty in a horrible state if we look at the yield curve. These might get resolved if the Russia-Ukraine thing fixes itself and the geopolitical issues, they sort of wind down a little bit. They might help this yield curve, but it's quite risk off. Okay, that's wrong. That's now below. Yeah, that's wrong. Below. So that's important to note. We're below. Oh no, we're still above the 26.5, but we're. Yeah, that's correct. Yeah, but we're below 30. That's fine. That's fine. Yeah, so we're still above the 26.5, which is your, we can think of it like a yearly pivot. So the high and the low, and then the midpoint between the high and the low. So we're still above that midpoint. However, we are below 30. Okay, so we're sort of a bit in between a rock and a hard place on the VIX. We're below the psychological round number, but we're above the yearly pivot. So if we go below 26.5, then that'll be quite risk on. Okay. So there's big shifting on the pound USD, the euro USD, German 30, UK 100, US oil. Big shift on AJ, which is interesting. It's now a sell at the big picture. But yeah, that's obviously sensitive to risk, so you've got to be careful with that. And there's the key. Try and get the colours to match. So pound USD would be a mismatch currently. But if we continue at that momentum, it'll flip to a buy at the big picture. So this is time, and this is the big picture, okay? So the USD, well, it's recoiled and it's regained some strength, which you can see since the previous day. And So it might be that this was just a temporary thing on the euro and the pound, and we're going to have some USD strength again. So yeah, I was saying whether or not how legit and how long this would be lasting. You know, when we look at the big picture, look at the 6 month, 1 year, the dollar's mega strong. I don't know if we want to fight that, but it all depends on risk appetite. And if we rally, then the dollar will soften. However, I think yesterday was just like a mad scramble, and I don't know how legit it was. We can look at the yield curve. We know we're quite risk off, but we are below 30 on the VIX. So, a bit of a mixed picture. And there's the pound USD, really rocketed, and the dollar CAD is the weakest. So, we might see some continuation on these instruments potentially, but the euro is being naughty, and I'll tell you why, because of the failure rate. And I'll speak to you about the failure rate at the bottom of this video. So yesterday's signal was poor. It was 110 pip loss due to the euro bubble doing a complete 180. It was over here, then it travelled all the way across on the bubble chart. It was over here, and then we come all the way back, right? So it's a lot of chop, and what's happened is because the increased volatility, it's causing a little bit of fear in the retail guys, and it's stopping them out. And because of that, they're widening stops, and then they're getting stopped out, and then it's causing a lot of disarray and panic in the retail space. So if we see a bubble do 180, there's just a lot of volatility, and it's quite rare to see a bubble do that, to be honest with you. It happens like maybe once a month, maybe. So yesterday was negative. Today will require a risk on day, so we'll have to wait and see with that. There's our tiers, so you can join those if you like. If you just want to get the Bulletin tier, it's £8 a month, which is like 33p a day, which is pretty decent. And you get the trade of the day as well, and analysis to support that. And this is what I was wondering about the S&P, is that this was, I don't know how legit that was. It looked like a, you know, like a mad scramble, like I keep saying. I don't know if we're going to see a retracement today, and then we might, you know, have some support and then bounce. If we look at the sentiment, we are set at the big picture, 1.04, and German 30 is now a buy, US 30 is a sell, UK 100 is a buy, so we're a bit mixed. I don't know how legit this was, and we rallied nearly 3% in a day. It's a bit bonkers. So there's them still in the S&P. So, you know, the circles, price action and sentiment, and now we're sideways, so we have to be careful. And this is what I think it might do. We might fall, and in order to really encourage these guys to sell, and that's what it might be happening. It might be like an illusion just to secure the retail guys to get in and sell, because we want them to be selling if we want this thing to come up. We don't want them to be buying. We don't really want sideways either. So I think today we might see some fall here, and then that'll just convince these guys that we're going to fall, and then they're going to sell. So they're going to be momentarily correct, but then they should hold on to their losses as we see a bounce later for New York, because we've got the US PMI, so we might see a fall here, potentially. Now the US 30 has made a sell because they've gone long against the 21 moving average, and what happens is they sell you know, at the bottom, and then they'll buy at the top, and it looks like they're going to try and buy up here. So they always counter trend. This is why the sentiment indicators are amazing, because it tells you what they do, as I heard, and it's quite amazing. DAX and this hexagon, it could be a sell if they go long. So I think we might be seeing some support come down, so down here then bounce potentially if it becomes a sell. And this is that zone I talked about yesterday, and this is the reason why they shorted it really heavily, because we failed to come back in that area here. We couldn't do it, and there's a big selling on this wick, and it came down, and this big candle as well. So yeah, potentially come down here, and then we're going to bounce. You can just look at your hourly chart here, and so we might have some support potentially. Now gold is being very naughty, because at a high level we're a sell, but we're coming up because the dollar was softening and there's yields and things. But see, they're going long, and so this 1717 level support is just basically that wick low, and this candle should be fake because at the high level we're a sell and they're going long. That's important. Over time, see that little, the increasing of that SSI as we go higher. So that would be unusual. So this probably is fake. But I'll do a quick 2-minute video for the private feed anyway. And largest stop loss cluster was UJ, but it's no longer. And it's the largest stop loss cluster is NU. And the one above for NU got absolutely destroyed because we had the RB and Z, and they hiked 50 basis points, and that just completely liquidated those stops above. And so that's how it works. It was 4% earlier, and now it's 1.54. So those guys got rinsed, and the largest stop loss cluster is there, 5705. And the largest mover was Euro USD at 12%, and they've got their stops at parity, right? And now the thing is with the euro, why we have to be careful, if you remember me saying at the very top of this video where we've got to be careful with the euro, is that it's currently paying the retail guys on their euro exposure. So they've gone long on their sentiment across the basket, and then they've got paid. Okay, so that would be really unusual, because what should happen is the price should punish them, but it's currently rewarding the herd. And it's got 0 score, so we shouldn't be trading anything with a 0 score, because we're undergoing a trap mechanic where the retail guys are getting paid momentarily, and then they're going to be wrong inevitably, and then price is going to reverse. So this is why we've got to try and keep an eye on this behavioural score matrix. It's the failure rate, and try and avoid something with a 0 score, because it's not normal for them to be profiting on their bias. These guys are really counter trend, as we can see on anything here. Look how counter trend they are, right? That's one instrument. So be careful with the euro today. And yeah, so we had a minus 110 pips or so. I think it's 100 pips or ish, but that's fine. We can just record that as a loss. And unfortunately for us, the euro bubble, it completely rubber banded, went from one extreme to the other, and then we've come back, right? So euro has been very tricky and quite naughty. Technically, we're moving away, which is nice to see. We were very extreme for a long time, and so that's that. So which is good, because it was getting kind of boring. Everything was like strong sell or strong buy. Now we're going to neutral. So we're seeing opportunities. But while we've got opportunities of this volatility, we've also got the risk of losses as well, because of the the increased volatility. And in case if you haven't got your risk management in place, then you'll probably encounter losses. So we are moving a lot on these instruments now, like 1%, 1.5%, 2% moves in a single day. So you have to have good risk management, and especially as things are moving technically away from their extremes. Okay, so risk management is absolutely key. PMI from Euro and PMI from UK. We've got ADP employment change. We've got some CAD data. Then we've got the PMI as well from the US. So quite a busy calendar today. And then we've got an FP Friday. Be careful with the USD because of the yields. Be careful with the Euro because of the sentiment. And keep calm. Always trade safely. And I'll speak to you guys for a 2-minute video now.